Welcome back to Squawk This Morning. Details continuing to emerge about one of Wall Street's least known fortunes, Bill Hwang at Archegos Capital. We are learning more about his life story and how he was able to build such enormous positions in few stocks, including becoming effectively Viacom CBS's single largest institutional shareholder. Kate Kelly and I worked on a story that published over the weekend. She joins us now. Kate, it's great to see you. I want to start with some news out just this morning, though, which is reports that Credit Suisse considering firing their chief risk officer over this news. JP Morgan estimating that there's something like $10 billion in losses that the banks across Wall Street may take. Mostly, it seems like, for Credit Suisse and Nomura. Do we think that there's going to be big heads rolling? It's one thing to fire the chief risk officer, and I know that may very well be a big head. But are CEOs going to be losing their jobs?
That's a great question, Andrew. I mean, as I spent a bunch of time reporting last year, Credit Suisse is only about a year into the new tenure of a new CEO after its prior CEO was ousted amid a surveillance scandal. That prior CEO had made risk management a huge priority. Now, the current CEO, Thomas Gottstein, would seem to be under a fair degree of pressure, although you're right, we're not seeing reports that he is about to lose his job. But that said, sacking the chief risk officer is a major move. That person's on the executive committee, Laura Warner, and I saw the same reports you did. And I believe one of the reports also said that the head of the investment bank, Brian Chin, is also under immense pressure. I know there are also expectations that we'll see resignations in the prime brokerage unit after this situation is managed.
And we should also mention Credit Suisse was involved with the Greensill mess,
That's
which
right.
also made lots of headlines recently. Let's talk about the Viacom piece of this, because that part of this story over the weekend seemed to generate a lot of buzz. This idea that Bill Hwang somehow became the largest institutional investor in Viacom, frankly, without Viacom even knowing it. How did that happen?
I know, it's amazing, Andrew. And when you and I were reporting this last week and talking amongst ourselves, we were both astonished as well, just at the size of the economic exposure and the fact that Viacom, it seemed, had not even really known about it until sometime mid to late March. So, yeah, I mean, through the use of these swaps, which are these complex derivatives that allow a party like Bill Hwang and Archegos Capital Management, the firm he ran, to have the economic exposure effectively to hold a stock and benefit from its rise, for example, without actually owning it, being the owner of record, means that he was able to amass a stake that two sources familiar with the position estimated to us to have a value of $20 billion, $20 billion. And that makes him far and away the largest effective shareholder in the company, far larger than Vanguard, which is the biggest institutional holder, larger than Sherry Redstone or the estate of Sumner Redstone or any other insider holders. So that's amazing. And the only reason this really came to light is that Viacom had done this share offering the week of March 22nd through Morgan Stanley, in which they wanted to raise $3 billion in new shares. And as they were marketing this deal, they were counting on an anchor investor for about $300 million of that offering, and that was Bill Hwang. And at some point in the couple of days where this was being marketed and the book parsed out, he fell out for reasons that aren't entirely clear, although I guess we could probably guess based on what happened next. And it wasn't until after that, when Viacom executives and the board were being briefed on what had happened with the deal fell short. It came in at about $2.65 billion, that there had been this anchor investor, Bill Hwang, who dropped out. And in fact, he was a large shareholder in their company.
Shepard Smith here. Thanks for watching CNBC on YouTube.